Think you need thousands of dollars to start investing? Think again. One of the biggest myths about investing is that you need a lot of money to start. But the truth is, thanks to modern investing apps and fractional shares, anyone can start investing, even with just a few dollars. The key is to start now, no matter how little you have. Time in the market is more important than timing the market. Alright, so where should you put your money? Here are the best low-cost investment options for beginners: fractional shares, stocks and ETFs. Invest in big companies like Apple, Tesla or Amazon with just $1. Great for long-term growth. Use apps like Robinhood, Webull or M1 Finance. Index funds and ETFs, safe and diversified. Best for long-term wealth building. Invest in the entire stock market, S&P 500 total market. Low-cost ETFs, VO, VTI, SPY, high-yield savings and bonds, safe and steady. Perfect for low-risk investing. Treasury bonds and I-bonds can grow your money safely. Use apps like Wealthfront and Betterment. Real estate investing with just $10. You don't need thousands to invest in real estate. Use platforms like Fundrise to invest in rental properties. Get passive income without buying a house. Now that you know where to invest, let's break it down into 3 simple steps. Step 1. Pick an investing app like Robinhood, M1 Finance or Webull. Step 2. Choose fractional shares or ETFs, for example, VOO, AAPL or TSLA. Step 3. Invest a small amount consistently, say $5, $10 or $20 per week. If you can set aside just $5 a day, you could build a 6-figure or even million-dollar portfolio over time. The key is consistency. Before you start, here are some big investing mistakes to avoid. Waiting too long to start. Time is your best friend. Investing in high-risk penny stocks. Stick to solid companies and ETFs, not diversifying your investments. Don't put all your money in one stock. So now you know how to start investing with little money. Remember, you don't need to be rich to invest, you just need to start. What's your favorite investing app? Comment below. If this video helped you, hit like and subscribe for more investing tips. Now that we've covered the basics and common mistakes, let's dive deeper into fractional shares. Fractional shares allow you to buy a portion of a stock, making it easier to invest in high-priced stocks like Amazon or Google. This way, you can diversify your portfolio without needing a lot of money. Apps like Robinhood and M1 Finance make it simple to buy fractional shares. These platforms are user-friendly and perfect for beginners. Remember, the key is to invest consistently, even if it's just a small amount each time. With fractional shares, you can own a piece of some of the world's biggest companies without breaking the bank. This opens up new opportunities for investment and growth, no matter your budget. So, start small, stay consistent, and watch your investments grow over time. If you're ready to take the next step in your investing journey, explore fractional shares today. Thanks for watching and happy investing. Next, let's talk about index funds and ETFs. These are great for beginners because they offer diversification and lower risk. By investing in an index fund, you're essentially buying a small piece of many different stocks, which spreads out your risk. Popular ETFs include VOO, which tracks the S&P 500, and VTI, which covers the total stock market. These funds have low fees and are a great way to build long-term wealth. Index funds and ETFs are perfect for those who prefer a more hands-off approach to investing. They are managed by professionals and aim to replicate the performance of a specific index like the S&P 500. This means you don't have to worry about picking individual stocks. Instead, you get exposure to a broad range of companies, reducing your overall risk. Additionally, these funds often come with lower expense ratios compared to mutual funds, making them a cost-effective choice for long-term investors. With consistent contributions, you can take advantage of compound interest and gradually build your wealth over time. So, if you're looking for a simple and effective way to invest, consider adding index funds and ETFs to your portfolio. They offer a balanced mix of stability and growth potential, making them ideal for both new and seasoned investors alike. Thank you for watching, and happy investing. High-yield savings accounts and bonds are another safe investment option. These are perfect for those who want to grow their money without taking on much risk. High-yield savings accounts offer better interest rates than regular savings accounts, and bonds, especially government bonds, are very secure. Apps like Wealthfront and Betterment can help you get started with these investments. High-yield savings accounts are a great way to earn more interest on your cash while still having easy access to your money. They are typically offered by online banks, which can afford to pay higher interest rates due to lower overhead costs. This makes them an excellent choice for your emergency fund or any short-term savings goals. Bonds, on the other hand, are a more long-term investment. When you buy a bond, you are essentially lending money to a government or corporation in exchange for periodic interest payments and the return of the bond's face value when it matures. Government bonds, in particular, are considered very safe because they are backed by the full faith and credit of the issuing government. For those who prefer a more hands-off approach, robo-advisor apps like Wealthfront and Betterment can help you get started with high-yield savings accounts and bonds. These apps offer automated investment services that can help you build a diversified portfolio tailored to your risk tolerance and financial goals. So if you're looking for low-risk ways to grow your money, consider high-yield savings accounts and bonds. They offer stability and security, making them a smart choice for conservative investors. Thank you for watching and happy investing. Real estate investing is also possible with little money. Platforms like Fundrise allow you to invest in real estate projects with as little as $10. This way, you can earn passive income from rental properties without having to buy a house yourself. Real estate can be a great way to diversify your investment portfolio and build wealth over time. Online platforms have made it easier than ever to get started in real estate investing, even if you don't have a large amount of capital. With just a small investment, you can become a part owner in various real estate properties, ranging from residential buildings to commercial spaces. These platforms pool funds from multiple investors to buy properties, which means you share in the rental income and any potential appreciation in property value. Moreover, real estate investments can provide a hedge against inflation, as property values and rental income tend to rise over time. This makes real estate a valuable addition to a diversified investment portfolio. Plus, the passive income generated from rental properties can provide a steady stream of cash flow, which can be reinvested or used to meet other financial goals. So if you're looking for a way to invest in real estate without the hassle of property management, consider platforms like Fundrise. With just a small initial investment, you can start building your real estate portfolio and enjoy the benefits of passive income and long-term wealth creation. Happy investing. Let's go over some advanced tips for investing. First, always do your research before investing in any stock or fund. Look at the company's financial health, market position, and future growth potential. Second, consider dollar-cost averaging, which means investing a fixed amount of money at regular intervals. This strategy can help reduce the impact of market volatility. Lastly, stay informed about market trends and economic news, as these can affect your investments. By staying informed and strategic, you can make smarter investment decisions that align with your financial goals. Happy investing. Finally, let's discuss the importance of having an emergency fund. Before you start investing, make sure you have enough savings to cover at least 3 to 6 months of living expenses. This will provide a financial cushion in case of unexpected expenses or job loss. An emergency fund ensures that you won't have to sell your investments prematurely to cover immediate needs.